Hi traders and welcome to the Technical Analysis Market Wrap on the 26th of August. So the market's been really good this week from a technical standpoint, bounced off all the levels that we really wanted it to and actually hit a lot of the targets. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD. As you can see, we hit the support that we were looking for at around that sort of 68.50 level, literally hit it to the pip, which was good. Hopefully you're able to get a good move there, because realistically it was always promising to get there pretty quickly, and obviously it's bounced up exactly how we would like it, straight into the 20 moving average. Now that 20 moving average is going to provide some form of resistance there, no question, and also we've also got a bit of a role reversal zone there as well too. Like you've got previous resistance that was right through here and through here, so it's not like it's an area that's new. We're talking about the nearly 70 cent zone. So although it's only 10, it was only 10 pips off it from its high anyway. So this is the 70 cent zone here, this blue line. I'll just drag this across a little bit so you can see what I'm talking about. And that's it there, that's the 70 cent mark. Okay, so realistically, it was very close to reaching it anyway. And most of the time, look, the 20 moving average would have just about had me out. I think while it's trading inside this range, it could probably bounce between the 68.50 and the 70 cent mark pretty easily. Look, you should have been able to get the move down, and you certainly would have seen the nice move bounce up. The way you get into a trade like that, of course, is you go to the smaller time frames and you look for those signals off that line. And you can see you had a multitude of bottoms here that actually basically picked up off that level and got going. So realistically, there were plenty of opportunities to get into it, but it is starting to reach the top end where it's probably going to find resistance. So realistically, what we're looking for now is maybe a little bit more, maybe one more push up. It could do it, but in reality, I'd be looking for a role reversal at around this level, anywhere between the 69.80 and the 70 cent mark. Probably a change of trend, a lower high, lower low sequence on a 15-minute or a 1-hour chart, and actually trade inside this channel until it eventually breaks out. The only thing that I would do different is if the daily closes above the 70 cent mark, say 70.20, or if, of course, the daily breaks through the 68.50, which is probably the least likely scenario, then I would be looking for shorts into the new areas and the new zones, which is the 67.30 level that you've got here, and also the high at around 72 sort of 20 and 72 up here. But again, even the 71 is going to provide some sort of resistance as well in the 200, but the daily has to close above the 70 cent mark for that to happen. Before we even consider that, we need a daily close above this level. If we get that, then it's a different story. But until then, I think we like to trade inside this channel, this 150 pip zone. It's been pretty good, holding and really finding the resistance where it needs to and the support where it needs to. And until it breaks that, we will trade what we see. All right, we'll move over to the US dollar CAD now. This US dollar CAD on the daily, same deal. Technicals played out perfectly. You can see it hit the target there of 130.50, so no worries there. Sold off fairly aggressively though, like you needed to be fairly quick on the mark to get that one, because it hit it. The short would have been difficult to get, no question about that, because it did happen very quickly, but the long was a no-brainer, and hopefully you were able to get that and take advantage of the move up and took your profit. More importantly, this is why we set the profits at the resistance zone. So as you can see here, this was previous resistance from these peaks here right through there, and it hit it and basically reversed straight away. So if you were sitting there and hoping that it was going to be able to go for a big long sustained move, you would have been disappointed, especially if you weren't there when it actually did turn around, because you'd be right back where you started. So hopefully you were able to capture that. And again, find yourself in the middle of this channel now. We know we're in a bit of a channel right through here. It's basically trading right in the middle of it. What the dollar index does is going to probably determine how this one plays out. Now, I would be sort of staying inside this channel still. I wouldn't be going any lower than the 128.50 area and any higher than the 30.50. I'd be sticking to those 200 pips range and basically aiming for either side of the channel. So I'd be going down to a 15-minute. Probably, I'll just zoom it out a little bit. Okay. So that's basically the channel that we're talking about. Any trades in the direction of either barrier is the one I would be taking. So a series of lower highs and lower lows, I'd be aiming for the 128.50, and a series of higher highs and higher lows, I'd be aiming for the 130.50. Basically as simple as that. When you draw your big time frame resistance and support levels, you can see how easy it is to trade the smaller time frames inside it. So yeah, that's a really big plus. You can see even here, if you were around during this trading session, you got a series of pullbacks to the 20 moving average that actually came down and gave you a reasonable amount of pips to basically get a decent trade in, which is nearly it was about 40 or 50 pips of pretty easy trading on the 15-minute chart. So that's what we're doing here. Pretty easy trading up to the 130.50 or down to the 128.40, depending on which way it breaks on the series of higher highs and higher lows, or lower highs and lower lows on a 15-minute or a 1 hour chart. All right, we'll move on now to the US dollar yen. And US dollar yen, again, look, this one's been a little bit flat. It hit the peak. This was here last week. I mean, it hit our target last week, really, and it hasn't done much at all since. So realistically, there hasn't even been a trade. I mean, I look at that and think to myself that there's nothing there to actually trade. We were sitting at the resistance point. Like I said, we got that long, so it was all good. But it hasn't really done anything, hasn't gone on with the job, and it certainly hasn't sold off either. So it's stuck in a little bit of a range at the moment. This is one of those ones where I wouldn't be really interested in this one unless it actually closed above the new high. So if we've got to close above 137.80 on a daily, then I'd be looking to target the 139.40 area, the previous high. But it needs to close above this level first, above the 137.80. If we get a daily close above there, we can start aiming for the previous high of around the 139. But failing that, if it does a series of lower highs and lower lows in a 4 hour, I'd be starting to target the 20 moving average again on the daily, and that will probably be around the 135 area by the time it actually closes and gets a little bit of momentum up. So probably the 135 on the lower end if we get a series of lower highs and lower lows on a 4 hour that is actually substantial. But yeah, to me, it needs to do something before I would trade it. And yeah, it is at a resistance point as well. So it's probably one of those ones where it's not a bad one to just sort of sit and watch and wait for it to actually play the game. But it's been good. Like, look, we got the good move out of it, and hopefully you're able to capture that and take your profit where we set it for. All right, over to the dollar index. So this one's done a pretty good job of respecting its levels as well. As you can see, we had the big bounce off the roll reversal zone, absolute classic roll reversal zone there. Did the job, went straight to the previous resistance, which is what you would expect. And this is what I love about TA. It gives us the levels that we're looking for. The predictability of it is actually really, really good. So hopefully you're able to take your profits there. I mean, it's the euro that we're shorting, of course, so we'll get to that in a second. But we can see very clearly that we're at resistance on the dollar index, and that's going to coincide with basic support on the euro. We'll go straight to the euro now. As you can see, the euro hit the bottom. Got below the dollar parity line, went all the way down to the low 99s, and it's trying to rally off this point now. Look, it's one of those ones where you could call it a double bottom, and it may well bounce off here, but it is a little bit of an unknown sort of quantity at the moment. Until we really get some clarity as to where it's going to go, I would be more reluctant to actually try and short it any further from here until we get a daily close below this level. Now, if we get a daily close below the 99, so say 98.80, which is below all these levels here, a daily close on that, and I would be starting to target some lows on this one to go even lower, and that would mean that the dollar index is probably going to go to 110. That's the way it would be traded, but until it actually does that, I wouldn't be trying to preempt any of that. I would be looking for a counter trend trade basically up to the 101 again, 101.15, which is this support zone here. A trade up to there would work. That wouldn't be too bad if we can get a series of higher highs and higher lows on a reasonable time frame like the 4 hour. That would get me counter trending up to this level, because that would coincide with the 20 moving average pullback as well by then. By the time it gets there, the 20 moving average should nearly be there on the daily. So that will give us a reasonable rebound point. And then maybe I wouldn't be looking any longer than that until it actually broke above it on a daily. I'd be probably looking for shorts at this point here. So daily close below the 99 or 98.90 is what I'd be going for, and we would be starting to target shorts. But unless it does that with a close, we'll look for a change of trend at this level here, a series of higher highs and higher lows in a 4 hour, and start aiming for the 101, and then we'll reassess at that point. But we know that's going to be very strong resistance because of the 20 moving average and the support line that actually broke through to actually get this move in the first place. All right, the last one we'll have a look at is the S&P, and this one again did everything exactly as we would like it to do. Hit the resistance that we were talking about at that 43, came back down all the way down to the bottom to the roll reversal zone. We knew this was a strong level, and it was a pretty easy trade. Hopefully you were able to get that. It's doing a bit of a pullback now. Look, we know seasonality-wise, September is generally a weak month for the stock market. So, we're not expecting any really big moves. It'd be against the seasonal trend if it did So I like to go with what is more obvious than anything else. And to me, the more obvious trade is probably a short here. But again, it needs to do it. Look, it's done all the right things. It's sold off from the area we needed it to. It came all the way down to the 41.50 was the target, so it actually overshot the target a little bit anyway. But yeah, hopefully you're able to catch that move because it was a pretty easy one. This is the level that we would expect it to pull back if it's going to. Yeah, and it did. As you can see, it's bounced up. It's hitting the 20 moving average from below though, but it's already out of the signal line, as you can see. So that, yeah, the signal line's already indicating that we may see a little bit of weakness. What it does from here is going to be very interesting. Look, if it breaks and closes above the 4,200 on the daily and starts to trend up again, we've got a pretty easy target of the 43, which is the flat out target we'd be going for, and the 200 moving average. But if it fails here and breaks down, I wouldn't trade it short though until it actually broke this role reversal zone. It's a pretty easy one to trade really. If we get a daily close below 4,100, I would be starting to target the lower levels at around the 39. That would be a 180 point move, and that's what I would be expecting from it if it daily closes below the 4,100. Okay, so daily close below this role reversal zone, we start to target the 3,900 in the first instance. If you're on a short trade, the 4,000, that'll be the 50 moving average by the time it gets there. But if a daily closes above the 20 moving average and above 4,200, then we can start targeting the 43 again. And you get in by a series of higher highs and higher lows on a 4 hour or a 1 hour, and a pullback to the 20 moving average, whichever one comes first. So both of them are very clearly defined zones, but we need the daily to actually close in the direction that we want to go to at those zones to make sure it gets in. Look, thank you so much for joining me today. Sorry about my voice, a little bit croaky because I've got a bit of a cold. I hope you've had a great week's trading. We've had some really good opportunities. All our targets got hit, so hopefully you're able to take advantage of those. Have a great weekend, and I look forward to seeing you all next week.